Hi, my name is Casey Platt. I am the options coach. You know, beginning in October, earnings season begins the time when over 2,000 publicly traded companies will step up to the confessional and tell us what they've been up to and how their business is going forward. Earnings plays are some of the most popular trades with customers today. Let me show you how to simplify it. Let me point out the setup. Let's look for the right amount of liquidity. These are characteristics of a profitable earnings play. Let me show you. I'm Casey Platt. You can visit me at www.the-options-coach.com. I always say that earnings plays are like falling on a hand grenade. Reason being, you never really know how far a stock's going to move once they report earnings. That being said, a lot of people really like earnings plays. Reason being, you get an enormous collapse in volatility. That's right. Most people sell high implied option volatility into earnings. I'm doing this presentation with the idea that this is educational. It's instructional, and it's not recommending any one trade or any absolutes here. All I'm saying is that if you sort to do earnings plays, there are certain characteristics that the pros use. When I say sorting, I mean I try to find the right stock, a good quality name, not a high-flying, sexy name. When I say a good setup, I mean far enough away from the at-the-money straddle and close enough to expiration to really get a collapse in the premium, where there's also enough trade and where there's not going to be a big amount of slippage, where the narrowness of the bid and ask is really apparent. And I want to also check all my historic directional indicators. What I mean is I want to know if a company has pre-announced. Maybe they've said what their earnings are going to be by narrowing their revenue range, or by saying expect us not to make the consensus analyst estimates for revenues, or check the open interests of calls and puts, because sometimes they can tell you which way the stock is going. And if you can align some of these indicators, that's the key, because putting those things together will really give you the confidence to stay with your position. Finding the right stock means a stock greater than $25 a share. That way the option premium will be big enough that you'll be able to really gain enough reward to make it worth the risk that you're taking on. Remember, this is a really risky trade, and this has got to be one of the smallest portions of your portfolio. Don't rely on this for monthly income. But it's a good trade as a means of taking advantage of a huge volatility collapse. You want a name that's not been an acquirer. It hasn't issued stock to take over another company. You want to make sure that this company has a solid record of quarterly earnings. Pepsi's a good example of that. Always hits the numbers within a penny or two. Or General Electric generally hits the numbers within a penny or two. In a solid growth industry, you don't want a crazy, sexy solar company, or you don't want a crazy, sexy biotech company that's going to tell you exactly how much money they made on the first quarter that they're reporting earnings on their first drug that they've made in their first profitable quarter. Avoid those names. Solid growth companies in a growth industry. If you have a $50 stock and the calls are $3 and the puts are $4, well, the professionals are saying this stock is going to move approximately $7 once they report earnings. That's our bet. Now, you want to be ideally in a position to sell options and sell strikes that are $7 away on the upside and $7 away on the downside. That's why you need a high dollar value stock. And you want an instance where you can compare the front month and the next month volatility to determine that, hey, the volatility is going to come in 10 points. So that's why it's important to know where you are in relation to the end of the earnings, end of the expiration cycle. Because the closer you are to expiration, the more collapse in that time value that you're going to get because the volatility's coming in. And remember, you want a narrow bid-ask spread. Options now trade in pennies. try to find an instance where you can get one in a pennies or nickels or dimes, no worse and no wider. And I would say use the midpoint between the bid and the ask all the time, because people are competing for your orders and for your business, and that's really what it's come down to. And I would do a couple of these in my paper money before I actually did one, and I would concentrate on 2 options within a stock that I'm going to use, so I know approximately the amount of premium that I'm going to sell, so that I know that I'm doing the right thing. And I think most importantly, the next day after the earnings are out, get out of 2/3 right away. What I'm saying is that if you do 3 of these, get out of 2 of them before 9 o'clock. Stocks open for business at 8:30. Get out before 9 o'clock. If you want to save the last one, well, I still think you're playing with fire. But directional indicators are the open interest in the calls and the puts that are the footprints that big bettors can't avoid leaving. What I'm saying is if there's a disproportionate amount of puts bought in relation to calls, that means that there's pressure on the downside. Or conversely, if there's more calls bought, you want to recognize that their stock could probably go higher. Keep in mind, though, that the best names have a balance of calls and puts purchased. And again, check the history of the stock that you've chosen and the price movement that it's made in recent quarters after the earnings have come out. Or check names in the same industries. Banks a lot of times move the same way. Big banks will have earnings and they'll all kind of move in the same direction. And that just happens to be for this year, but it might change next year. By aligning several indicators, you'll be able to build confidence to find one of these names. Don't have to do a bunch, just have to find a couple. And I make sure that I know exactly the details that are to come out the day that the earnings are reported. Again, my name is Casey Platt. I am the Options Coach. Look for me at www.the-options-coach.com.